Welcome everyone, this is Tim Chandler, and this is my introduction to currency trading video. This is a basic video, and it's not meant for people that know anything about currency trading because it's just covers the basics. And I guarantee you will be, if you're looking at currency trading for the first time, you will be intimidated and you will not understand what I'm saying at first. You might have to stop the video and play what I say a couple different times, although I will go over it a few different times. But I remember back when I first looked at currency trading over 10 years ago, I was absolutely blown away by the first training that I had, and I just kind of just shook my head and I thought, oh my gosh, I'll never get this. And so anything in life, I think if you're unfamiliar with something, that's the way it is. But I just ask that you take a serious look at it because it's really quite exciting and quite fun, and you can make a lot of money out of currency trading. So anyway, here we go. These are called Japanese candlesticks, and all they do is represent the price of the currency. Okay, and people think, what is currency? Well, currency is like the dollar, like the euro, the Great British Pound, the yen. Okay, so those are different currencies, and you can trade any currency you want basically. But this particular chart is the euro dollar. And so as you can see over in the left hand corner up here, it is the euro is first and the US is second. So in other words, I call the euro the main currency. In other words, if these candlesticks are going up, the euro is going up in value, and it costs more to buy that particular currency against the dollar if this is going up, because the euro is gaining value. If it's going down, then it's decreasing, of course. These candlesticks are, if they're blue, they're going up, and if they're red, they're going down. Now these numbers over here, each time it moves, that's called a pip, okay? And you don't need to know the definitions of everything right up front, but it's just called a pip, okay? If you want to buy or sell a currency, you buy and sell in what it's called lots. There's a mini lot, which is basically it's 10 cents, and there's a regular lot, which is $1, and then there's a standard lot, which is $10. And you just choose how many lots you want to put on that trade, and what type of lot you want to put on the trade. And again, this gets a little bit confusing, so after you hear it a few times, it starts to make sense. What I'm going to do is explain the candlesticks to you right now, and there's certain things you need to know, especially if you're trading my strategy. But there's different types of moves, and I'm going to explain those to you right now. Or different, I should say, not moves, but different types of targets that I look for when I'm trading. I wrap this candle here, and first of all, I guess I'll explain to you the difference between the candle body and the candle wick. The candle body is where the candle opens and closes. And what I mean by that is, let's say this candle, because I'm trading off of 15-minute candlesticks, and keep in mind, all this does is represent price at the time of day that you're trading. Like, this is not a live chart right now, and the reason why, because I'm making this video on Saturday, so the market is closed, and it opens up again on Sunday afternoon. Closes Friday afternoon and opens up on Saturday or Sunday afternoon. So anyway, this is where the price closed on Friday afternoon. Anyway, the blue candle body is just where it opened and closed. Again, this is a 15-minute candlestick. So let's say that it closed at 10 a.m. Friday morning. Then this candle moves over to this candle, and this candle opened up at 10 a.m. and then it closed at 10:15. This candle opens at 10:15 and closed at 10:30. This candle opens up at 10:30 and opens up at 10:45. So the wick, what the wick represents is where the price went to. Let me move these lines to this candle over here because it gives you a better representative of what a wick is. This is where the candle closed. This is where it opened. Or this is where it actually opened because it switched over from this candle here, and then it closed here. So it opened here, closed here, but the price action during that 15-minute period went up to here and went down to there. But it's important to know why it, or when it opened and closed, and that's all the body represents. And again, this is a video, you can stop it and you can reverse it and listen to that over and over again, so I don't have to keep repeating myself. But I'm going to give you several examples of different targets that I look for and show you how the market repeats itself, and you'll be kind of blown away by how you can judge by which where it's going to stop, where it's going to start, and so that's how you make money. Let me give an example. If you were to take this trade and you were to sell, and you can buy or sell, if you were to sell it right here and go down to here, the numbers over here is 0866 to 0803, so approximately that is right around 60 pips. Now if you had a dime on that trade, you would have made $6. If you had a dollar on that trade, obviously you'd made $60. Not that much money, of course, but keep in mind that's during 1 hour. Now let's say you had or you had one standard lot, which would be $10. You just made $600 in 1/2 hour. Okay, so you can see that you can make quite a bit of money. And again, if you had 10 standards on that, or 100 standards, you can make it never stops. And of course, you can lose that too. But you can set stop losses. So whenever I take a trade, let's say I'm going to take a trade here, I'm going to set my stop loss right down below these wicks, and so I'm not going to lose that much on that trade in case it goes against me. Now I have a pretty good indication that it's going to go up by the other indicators that I put on the charts, but I'm not going to go into too much detail on a bunch of different indicators I use because I don't want to confuse you, because again, this is just a beginner's video. But again, let me show you a couple different targets that I look at. You can clearly see that this is where this movement went down, okay? So if I'm going up, and let's say I'm looking for a down trade, I'm looking to where a trade started. There's two different types of targets I look at. One where a trade started, or one where a trade broke out. In other words, here's another trade. I'm trying to move this line here, I'm not grabbing it correctly. Here's another trade that started, or another move I should say, started down. This is called a breakout. Why is it called a breakout? Because it didn't, and these are names that I've made up, guys. So this move did not hold this move here, so see how it broke out. So it's called a breakout. So let's say that I'm trading in the up direction. I want to come back, and there's two types of targets I look at. I either look at a breakout, which that's where it stopped, or I look at a start of a move. So in other words, I'm looking for it to come down to the breakout where I just had those lines, or I'm looking for it to come down to the start of the move. And obviously this is where it stopped. And again, I have other indicators telling me that it probably will stop here, and then these candles here are telling me that it's going to stop, or has a good probability of it stopping there. Okay, so again, these are 15-minute in duration. The wicks tell me where the price went to during that duration of time, and the bodies tells me where the candles opened and closed during that duration of time. Okay, so hopefully that makes a little bit of sense. What I'm going to do is I'm going to shrink these candles down so I can go back in time, and what these lines here represent is 1 day. Okay, again, these are 15-minute candlesticks. I can put that on daily, and these represent a daily candlestick. So that is where the price happened in one day, that movement. There would be 2 days, 3 days, 4 days, and so on, okay? So anyway, back to the 15-minute candlesticks. This is all the candles that happen in that one day. So again, there are, it doesn't matter where I stop. I can stop on any day. And when I'm doing my live training, people can stop and I can show you exactly the same thing that I just showed you before. This broke out, came back down, held, and went up. It didn't come down to the start of the move. So that's called a breakout, and that's called my first target. My second target would be down, which I lost it. My second target would be down here, okay? So again, this didn't come up to the start of the move. It came up to where it broke out. See where that broke out from that move there? Okay. I can go on and on and on, and this came down to this start of a move. This came back to where this broke out from this up move. Again, I can draw lines here and show you where that broke out. It came to the breakout. It didn't come to the start of the move. The start of the move is up here. Okay? Look at this. It almost reached the start of the move, but actually that's a little separate move there. That's where that broke out from, and that's where that stopped. So it came down to breakout. So that would be a first target. And I have somebody Skyping me right now, so if you hear little beeps, that's one of my leaders Skyping me right now. Let me get rid of this here. Anyway, so you can go back in time and look at several different, again, see how that move started there? Look where this move broke out from that down move, and that's exactly where that came down from. Or I should say it came down to. See that? Come down to that, where that move, this move broke out from that move right there. Let's see, I want to go back and just show you how again, it comes down to starts of moves. There's a start of a move. This is where this broke out. And it held there for a little bit, but then it went up to where it broke out here. So you have to be careful. Whenever you take a trade and it looks like it's going to hold and go up, it's going right up into a target where that broke out from. So I want some space in between the trade that I take. And I know that probably doesn't make sense to most of you that are looking at this for the first time, but those are things that I go over in my classes that I teach. Okay? And I have several different ways to teach. Now, obviously, this is a free video. My next video is how to set up a trade station. You learn how to put on indicators. You learn how to set up your charts. And let me minimize this chart. And the reason why I have 6 charts here, all my currencies, and I trade several different currencies, but all my currencies I set up like this. And they have other indicators on it, but I want to keep it basic right now. But I believe in correlation a lot. In other words, these currencies across the top here, what do they have in common? They have the US dollar. See, it's a pound US, the euro US, and notice how the US is first here. The reason why I want that opposite of these here, and the reason why is because as this is, let's say the US is weak as it is here on Friday. It was weak on Friday. It was going down. Now you can see how the euro, let me shrink these down here. The euro was going up on Friday, and so was the pound up until the last half hour it went down. But this was kind of going up, not as much as the euro, but it was going up as this was going down. So, and the same thing with targets. As you see this coming down to a breakout, that's a perfect target. It was a great trade for going up. As this is going up, hitting a target and going down. Actually, it came right here, and this is where it went down. So, very, very important to work with correlation. That's one of in my opinion, I don't want to say it's a trade secret. A lot of traders know correlation, of course. Another one is trading with the trend, of course. But the key is the indicators that I use along with everything else that I teach on my videos. again, I don't want to make this too long. This is an introductory video, and I think I covered pretty much everything on, just to kind of give you an idea of what currency trading is all about. Give you a basic knowledge of what currency trading is. The next video, which is another free video, again, it's about setting up and how to work the TradeStation. It gives you everything you need to know to trade my style of trading. And then I have another video after that which tells you basically all my trading secrets of the last 10 plus years of trading. But anyway, thank you guys and girls, and I will see you soon, and have a great day. Thank you very much. Bye-bye.